Hello, everyone. Hope you're doing pretty well. Welcome to Invest IQ. This is a YouTube channel that I recently started. I always wanted to start this. I've seen other YouTubers online go ahead and start this, and I wanted to share my journey, my experience in investing, and how that's going. Because I'm very passionate about this kind of stuff. I've been doing it for about a few years. I've obviously, my past track record, we can kind of go over it a little bit, but I've had different strategies while I was investing. I played around with, different ways to invest, and some of them worked, some of them didn't. All that to help me gain experience, so I know how to approach investing, and now I'm approaching it from a different uh, strategy, which is, I believe, more effective, and I can ultimately, put more money invested into it, and the risk is small compared to what I was doing before. But I can go more in depth with my strategy, even a little bit more about it, maybe in some other videos. But first of all, I just want to go ahead and just point this out to you that today officially marks. So today, November 4th, 2025, marks the longest government shutdown in the United States history. I believe it's 25 days that the government's been has been shut down, and it has been the longest since the history of the United States. And I think that that's really, really interesting. Like, in this channel, we're going to be talking about different, like, events and how that impacts the market, especially when it goes to investing or whatnot. One thing that I want to go ahead and kind of mention while we're kind of on a topic. Again, we're gonna talk about a lot of different things like geopolitics. We're gonna talk about all these other things that ultimately, impact the market. So whatever impacts the market, at least what I'm investing in, that's within my strategy, we will go ahead and talk about it on this channel. Like for example, the presidency of Donald Trump. You can either like him or not like him, but over his tenure, he's only been here for about, yeah, I think today's election day. But he's been here, I believe, think about 10 months, maybe 9 months, 10 months, 11 months, around there. And a lot has, changed within the market. Like for example, he was one of the presidents that went ahead and initiated widespread tariffs that dramatically impacted the market. We've seen a significant drop, at least, especially even the one I'm invested in right now, Stitch Fix. And the market just tanked, went to about shares typically average around, $3, around $3, maybe high threes. And then, but when it's going to mature, high $5, so 580, 590, around like $6 per share. But then, but ever since he announced the tariffs, stock dropped below $3 per share and went all the way down to $2.50, I think, per share. Let me see. Let me go ahead and show that to you, so you get a better understanding of what I'm talking about. So I'm pulling up right now while I'm on the subject. This is the company called Stitch Fix that I am heavily invested in. I think that this company, especially long-term wise, I believe it's going to be very, very successful. But again, my strategy isn't holding, like investing, let's say $20,000 and just holding that, or buying whatever. Like let's say it's shares. Let's talk in shares. So let's say I want to go ahead and buy, 1,500 shares, and then just holding that for 5 years. That's not my strategy. My strategy kind of focuses on is based off of financial results from the earnings calls. So, once a quarter, a company go ahead and publish their earnings calls, and then based off of the earnings calls, I either hold, buy, or sell. But I haven't really bought yet. Again, this is the strategy is it's fairly new, but it's worked compared to the other strategies that I used previously. But so far it's been treating me pretty decently. But let's go ahead and let me show you of what happened when Trump announced the tariffs and how the stock price, you know, dipped to around like you know $2.50, per share. Sorry, $2 and yeah, right here, $2 and 75 cents per share. Which is pretty interesting. I wish it can go down that low right now. I would buy because I would buy even more shares. I would try to lower down my average cost. But things like that we talk about. And then so now what we have going on is the longest government shutdown, which is pretty interesting because we haven't really been through this before, which is similar to the tariffs, at least for my existence. I've learned that things impact the market in different ways and how resilient the American economy is. Certain businesses, excuse me, let me correct myself, how resilient certain businesses are. Just because you're a business within the American economy, that doesn't necessarily mean that you're very effective. But certain businesses tend to make a comeback, especially when like there's tough times, challenging, for example, what like the pandemic that just happened. But this company that I invested in during the pandemic, it did really, really well. Again, I can go more in depth on why I chose um to invest in Stitch Fix and why I believe that it will be a good investment moving forward and why I decide to either sell or hold on earnings calls and not wait for like 5 years depending on the stock of course and the future outlook. There's a lot that goes into it. I'm not just making these because I feel like it. There's numbers and there's metrics that I like to look at to make sure that I'm actually getting the best bang for my buck or the best value because I think you can make more money selling and buying within that 5 years that will ultimately beat it. Beat the returns within, five. Because if you, for example, if you went ahead and bought Stitch Fix at, let's go right here, 2020. So a little bit, around pandemic era, a little bit earlier, or a little bit later going into it. And it was at $12.70 cents per share. And the pandemic happened. Everybody was all like everybody was staying home, so there wasn't much to do. And then the stock just took off. As you can see, it just went all the way up to the highest, the peak, around $95, $95.44 per share. I've done extensive research on the business. I know that during this time, that there was a transition of CEOs. So the original founder, Katrina Lakes, she actually founded this business. It wasn't originally called Stitch Fix. It was called, I think, something Rack. I gotta go ahead and make sure, but it's like something Rack. She founded this business uh in Harvard when she was in Harvard. I think there's a Hawthorne. I think that's where she stayed. I'm not too sure. And that's Hawthorne is a brand, is a private brand within Stitch Fix. But I've done some research on it there, and then there's a transition of CEOs. And then I'm thinking on her name, but I know she was from Maine. And I based off of the results, it's not just me saying it, but based off of the results that I see ever since that transition, the stock plummeted. I mean, obviously there's more than, that change, but I believe the CEO and the CFO, again, I believe because my understanding is you can let the economy do whatever it wants, but if you as a business are effective and very efficient, I think you're able to find, wiggle room or way around, so you can ultimately become the biggest business or more profitable business, you know, overall. Obviously, there's gonna be some times like Pandemic happening, that's random and that's fine. But you as a CEO have to be able to turn that business around and make it profitable again. And if you are not able to do that, again, like, because she came in around, I think 20, that's when transition happened around like 2021, around that time. And then maybe, yeah, or maybe around this time she came in, but then she stayed for about it's like someone's giving me a call. Let me see. She stayed about for a few years actually. So Katrina really Lakes didn't just kick her out immediately. She gave her a few years, but then there was no results was really being met, as you can see. Sorry, just go. There we go. As you can see, she didn't really do too much because the stock went down and never really recovered ever since then. And then they brought in another CEO, Matt Bear, the current one right now, Matt Bear. And obviously within 1 year, turning around a business isn't really easy. It takes some time. And within their first year, he was able to go ahead and kind of, get the groundwork. She got to build the relationships and got it going on the back end, and do what CEOs do. Went ahead and changed the logo to a new one. And so like everything like the mojo, the energy behind Stitch Fix is a little bit different because I think the CEO kind of drives that innovation and that momentum. But ever since he came in, he's been introducing all these new features, all these new kind of updates to the business, which I think is really good for the long run. Because as we speak right now, they're actually expecting Stitch Fix is expecting Q3 uh their Q3 2026 to be a quarter-over-quarter active client count increase, which is really, really important because over the span of about, the few years that we have right here, it's been losing clients, and it's been losing clients, especially on certain like transitions during that time, um, really dramatically. We were losing about like maybe let's say 32%. No, maybe for a quarter or two, and then it would be like another 5%, then it'll be another 10%, and it'll be closer to that. But ever since when Matt came, the amount of decline for active clients, quarter over quarter, because this is a second, you have to understand the business. This is a seasonal business. So certain seasons, it's much more, profitable, it's much more active. Because this business right here, Stitch Fix, they have their model is different from like any other competitors. There is no subscription. You go ahead and you just go online whenever you want to order a box, a fix, that's what they call it, FIX. If you want to order a fix, you go online and you would go ahead and order it. So it isn't like a recurring. You can do it recurrently, but it doesn't require customers to do that, if that makes any sense. So with that being said, is you don't necessarily have a indicator that points out that this is what you're gonna expect in terms of revenue wise, um, every quarter. Now you have to go ahead and figure out, okay, based off of the seasons, how did you do in, let's say Q2 2025 compared to Q2 2026, or something like that. Just to give you an example, and that's how you would go ahead and make your judgments based off of that. But I'll be talking a little bit more, but I've done extensive research on this business, and I think that this is the business that's going to go ahead and get me to my goal that I want to reach. And I'll go ahead and because I ultimately want to drive this portfolio up to 100 grand, my first 100 grand just through investing. Like I told you, I've made profited from this business, from the strategy at least. And I think that this is a strategy that works. But let's dive in real quick. So this is Stitch Fix, the company that I'm invested in right now. I have 455 shares, I guess 60, 76, 81, as you can see. And and yeah, so right now I have half of my money invested into it. I don't have everything in it. As you can see, I still have more purchasing power, about 2,195. I haven't really bought a lot of shares yet. I mean, I bought half because I didn't want to miss out on any returns that I can possibly gain. Because as you can see, total returns. Again, I go by percentage. I'm up 1.84%. I'll tell you a little bit more about why I'm holding right now, but I have to. But that's when I jump back to my regular one now, and I'll show you some of the gains that I made from this strategy. But as you can see, I still have a good amount of some money just sitting here. So I'm waiting for the stock to dip below $3. I'm hoping that the government shutdown impacts the market in a way which I've been watching very, very closely because it's not just a regular government shutdown. It's the longest government shutdown in the history of the United States, and that creates some uncertainty. And investors don't like uncertainty. So I'm wondering if that matters because like if the government shut down for about a week, 2 week, that's fine is not record breaking. Like this is record breaking. I'm not sure if that would do something to the stock. I'm hoping it would. So that's why I'm kind of holding back and not really investing because I'm expecting, I think based off of what I know, maybe I'm right, maybe I'm wrong. Who knows that the stock will dip below $3 per share. I want to go in when it is roughly I want to say if as low as I possibly can within the $3 range. It can be like a low $3, mid $3. I want to try to avoid. I'll do a high $3, but my sweet spot is mid $3, so $3.50 per share. And I can show you how I'll make the return, but that's what I'm really aiming for, and that's why I haven't really bought in a lot of the shares yet. So let's go ahead and just take a look at the stock overview. So 1 week, so 1 month, and as you can see, it's just kind of going up and down, going to 3 months in. So this is when their earnings calls hit. So the stock was at $5.64, cents per share. And previously, I had about 12,000. No, I have like 1,200 shares valued at $4.04 per share. So I've made, roughly, let's actually go ahead and just take a look, take a look at it. So let's see. All right, let's see. So this is my current one right now. As like I told you, I just recently bought a little bit of shares. I'm waiting for it to kind of tank drop a little bit more because of the government shutdown uncertainty. So I'll show you a little bit more. So this is my personal investing. Again, 4,000. I had 6,000, but I had to take care of some personal things. So I just, removed that. But right now, whatever we're starting, 4,000, and we want to get to $100,000. I want to see how long it's gonna take me. It all depends on business, how well it does, and if I'm able to execute correctly. But sure. So let's go ahead and um zoom out to the 3 month, as you can see, because this is when I sold my shares. At the 24th, I told you that's when the earnings calls hit, and I knew that the stock was gonna plummet. So, based off of the earnings, the financials. So I sold my shares, which I didn't when I was invested into it. I didn't really get get impacted by the drop of it. I sold with profit. Okay. So if we go right here, I've made, let's see, close to about 40%, or even more. Yeah, close to about 40% over the last 3 months. I want to say, let's go out to, let me see, about a year. be transparent. Let's see. So go out to about a year. Okay. So I'm gonna give you a little bit of a history of this. You're just because right now you're just seeing numbers and stuff like that. I'm seeing a strategy. That's what I'm seeing. I'm trying to tell you of what I went through and stuff like that. So let's actually back up to about a year. Okay, let's go all. Okay, so this is my current all-time. So you can get a better understanding of it. My current all-time investing portfolio. As you can see, so during 2021, I had this is when I was in college, so I was on the internet or whatnot, and I wanted to kind of get a little bit into investing. So silly me. I got a few $1,000s and I invested it into like the meme stock. I think it was like GameStop, whatever it was, and then it just tanked, and I couldn't really understand what that was. I was furious. I was mad. I lost money, so I didn't really invest as much as you can see. So it just kind of a little bit of so then just years kind of went by. I was like I lost a lot of money. I got scared. I didn't really want to invest as much. And then I decided to go, you know what, I want to give this investing another shot. And right here, this is when I invested into a stock called Carvana. Again, I was doing a lot of research on the company itself during that time. So let's go ahead and take a look at Carvana. So this is what actually sparked um, the reason for the reason why Carvana. This is the reason what stock which kind of sparked my interest in investing because um if you saw that little gradual I guess increase um again this is back when I was in high school, no, this is college, this is back when I was in college, and if you span back, I think that was 2023, I want to say. So yeah, it was right over here. Yeah, so I invested into Carvana when it was roughly around $7 per share. At that time I didn't have a lot of money, but I invested into it because I did a lot of research or whatnot. And that's again my history relatively new to investing, did the meme stock that kind of scared me a little bit. So I had to kind of because when you invest, you're gonna lose money. You have to overcome that fear. You're gonna see ups and downs. Ultimately, you don't want to lose money. That's why I don't really do day trading. I don't like to touch any of that. I like this strategy better because it's much more predictable compared to day trading. It's too volatile. At least for me, if your risk level is that high, then I would recommend. I wouldn't even recommend day trading, to be honest with you. I would recommend either quarterly or yearly investments, something long term, nothing like day by day. But I invested into Carvana when it was $7 per share, and then it went up all the way to around $45 per share. Um, I just saw that little increase in my portfolio. That was what happened, and then I saw that the stock was crashing at that time. It went to like $39. So I got scared, I got panicked, and I decided to sell. And then let me see. Let's go right back. Um, and then let's go to all right here. So right here, then I decided to sell. And then I was like, that's pretty interesting. So then at this time also took I also sold because I needed some money to go through it, but ended up, you know, I can't really talk a lot about it, but I regret that decision. Okay, let's just say that. All right. I could be in a better place right now, but it happens. So again, this I'm still fairly new to it, but now I'm learning from my mistakes and I'm getting a better understanding of how to really invest your money, and actually make decent returns. So that time, a few months went by, and then I started go ahead and do a lot of research on another company, and it was I think something Life, Health Life, but it was a holding company that mainly focused on like healthy brands like nutrition, and they had like different ones, but um I then realized that, that's not really the company that I'm after. So then I adjusted my strategy a bit, which led me to invest to another stock, called, let's see, Children's Place. So I invested into the Children's Place. I bought a, you know, I was close, not 1,000 shares. I bought a couple hundred shares. Again, I didn't, I'm still kind of, working up on that pile, and I think, with the strategy, it might help me buy even thousands of shares. But let's go, let's jump back to about a year, maybe five, not max. Mm, It's right here. About a year, maybe a year in. Yeah, this is showing. Yeah, like I got to go five. So right here. So during that's 2024. During that time, yeah. So during that time, again, I had like a lot of shares at like $5 per share, and I was just seeing negative, for about a month or so, and I was just like, I'm gonna go through it. I'm gonna go through it. I'm not really sure like what I was expecting or whatnot, and then out of nowhere, that stock jumps all the way up to $17 per share. Again, I had like hundreds of shares that valued at $5 per share, and it jumps up to 15. Let's say the other $15 per share. That's 200%. So I made 200% at that time, but I didn't sell it. That's the thing. Like I didn't really understand why the stock went that high. Like why did it jump? Why did I make 200%? Because look, right, if you take a look at it, that's within the same month. That was like a couple of days, and I made a really good return, beating. I was investing in that for about 2 months, and I did really well, and in September. Of course, I didn't really understand what was really going on, what impacted it. So I started to do a little more research on the stock, and I realized that the earnings calls dropped, and I was like, that's pretty interesting. So I connected. So I was like, does the earnings call impact how a stock does, or whatnot? So I did even more research, and I found out that earnings calls are a huge determiner, I guess, factor of how a stock does. So then, ever since then, I've been basing my decisions based off of earnings calls and financial reportings, actual numbers, and not guessing. And this led me to this strategy right now, currently right now, which is Stitch Fix. And like I told you, I've made around 40% so far within a quarter, which I think that's beating. I was talking to someone, he said roughly for his 401k makes him around maybe 5% a year. And it would be like maybe he was like, if I get 10-15% return for the year, that's a really good year. That's what he was telling me. And I made roughly 40% in one quarter, not a year, but a one quarter, 3 months. Um, so I started thinking. So then now I'm leading now I'm in this stock right now, and I'm doing pretty well. At this time when I was invested into Stitch Fix, I didn't sell when it was at the seventh right there because I should have sold right here because that's when the earnings call dropped, and then Trump announced he announced the tariffs, which even tanked the market even a bit more. I think if I'm looking at it right. So that had a negative impact on my investing. But I learned from that lesson because I learned is like because I didn't really know if I had to hold, sell, but I know that it was going to impact the stock was going to get impacted, but I'm not really sure if it was going to be a positive impact, a negative impact. Now I understand that you have to have experience within the stock. You have to understand the stock. You got to become one with the company. So then I started thinking, okay, so instead of holding, because this is when the earnings calls drop around this time, just when the earnings call dropped, and it's their stock just tanked, and I basically was impacted by it. But if I sold right up here and then I bought down here. My return from here to here, from here to there, that'll be really good. So 10%, and then so that'll been a really good return right there, and then my portfolio would kept them going higher. So then I realized that, so I just hold, I was holding, I held, kept on holding, and then boom, I realized that they're gonna go ahead and have another earnings calls, financial, reporting, on the 23rd, or close to that date on September, and I decided to sell. But I want to show you something pretty interesting with the stock. Again, the longer you're with the stock, you're going to notice certain things. I'm not sure if this applies to every other stock, but this applies to this one that I'm about to show you, which I think is pretty cool. Let me see. Let's just have it load, and then I'll go ahead and I'll show it to you. Okay. Okay. So, yeah, I'm not sure if it's showing that to you here, but no, it's not showing. But the interesting part was on this day when the earnings dropped, the stock actually went up to $6, and I think because it's highest at the moment within last year. You see, it did this, it did that. But it didn't. Sometimes it won't really show it to you because based off of how the Stitch Fix, based off how Robinhood shows the graph. But the stock did go up to $6 and like 40 uh per share in one day. So it jumped up. It jumped up about 25% in after hour trading. Um so I'm like, and I started thinking, this is a common trait this is a common thing that happens with Stitch Fix stock. Again, now you have to go into the investors that are invested into Stitch Fix. I know what Telsey Advisory, when I'm listening to earnings calls, she's there as well. I know other people are there, but mainly Telsey Advisory Group because she just invited Stitch Fix to Telsey Advisory Group. They had like a summit, and I listened to what they were talking about at their summit. But she seems like she's an active, heavily involved with Stitch Fix for years. But that's something I wanted to point out is now. So I started to test out: can I buy shares, or can I sell shares at after market? Because I thought that in the aftermarket, I couldn't really sell any shares, um, or buy, but find out that I could sell shares in the aftermarket, but I can't buy. So this strategy coming up. Hopefully, if everything goes pretty well, if it dips around $3 per share, obviously I'll update y'all with any big updates. But I'll hold it during earnings call, and then I'll be recording it as well, so y'all can see it. And I'll show you the returns that I'm talking about, so you can see it right there in front of your face. And then we can go from there. I know that their next quarter they're expecting one of the KPIs to be flat or low point 0.5. So I'm ultimately going to sell the shares, but I'll sell it at aftermarket after the financial reporting drops because I know the stock is going to shoot up and then it's going to dip like it did right here. And now, like I told you, I want to get the most return. Look at that 104%. So if you invested like 100 grand and in December 11th, you would have made 100 grand back. If it obviously if it's you had it at $3 or $3 at 39 cents because it went up 104 you know percent per share. So you made a pretty good return. You made 100% of whatever you invested back. So that's pretty interesting. But that's what I'm currently at right now. It's because it's a pretty interesting stock. I think over the long run, buying and selling it, you can definitely um earn you can make your returns. Again, I don't think the strategy only applies to Stitch Fix. I think the strategy applies to other stocks as well, but it has to be studied. You have to really understand the stock because again, then you have to understand the investors that are invested into it and what it is that they typically do or whatnot. But yeah, so this is where I'm currently am right now. I will go ahead and I'll update y'all on what my next moves are moving forward after this, after the government shutdown or whatnot. I'll even do uploads when there's like something major that happened within within the economy that impacts my portfolio. But yeah, so again, this is just a little bit of an introductory of my portfolio, a little bit about my background, and to see if we can hit $100,000. I think we can. I think the strategy that I have right now, I think it works. I think it's really, really good. But we're just gonna have to see. Only time can tell. So, but without further ado, thank you for listening to Invest IQ. I really do appreciate it. Subscribe, and tune in. Say hi in the comment section, and just kind of stay active, or whatnot. And hopefully you're able to watch me achieve my financial goals. With that, have a good one. Take care. Bye.